covered. Remember, Big Lou's like you. He's on meds, too. Call 800-555-1509. 800-555-1509.
Are you paying too much for term life insurance? A man age 50 non-tobacco user can obtain $500,000 of coverage for as little as $110 per month. Level rate for 20 years. That's right, guaranteed level rate for 20 years. If you're a smoker, there are great rates available for you as well. Call Term Busters for a quote. 1-800-908-7636. You're probably paying more than you should. Call 1-800-908-7636. Remember, call Term Busters. 1-800-908-7636. Sample rate for preferred non-tobacco rate class. Exam required to qualify.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer, Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
Broadcasting from the Kanowski-Bresney studios comes the radio medium Laura Lee Show.
I feel like you had to let him go.
Yes, it is. He was on life support.
You've taken on the burden for his passing. Is that true?
That is right.
There's something to do with a Barbie doll.
He used to stick the old school Barbie dolls in the cake.
Oh my God, you're giving me goosebumps right now.
The radio medium Laura Lee Show. Tune into your spirit every Tuesday at 4 p.m.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is WBNW, 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston, the Money Matters Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. When it comes to legacy planning, having a will is important, but it may not be enough. A will only covers probate assets, and the probate process can be slow, public, and expensive. That's where trusts come in. Trust can help you avoid probate, keep your wishes private, and control how and when your assets are distributed. Whether you're looking to support family, minimize taxes, or prepare for the unexpected, a well-designed plan can make a meaningful difference. Our new free guide, Leaving a Lasting Legacy, covers wills, trusts, and other strategies to help you build a strong retirement plan. Take the first step towards clarity by calling 800-393-4001 right now and asking for your free guide today. That number again is 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/backtoschool.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about your new guide, Todd, demystifying the top 7 estate planning trusts. If there are younger families out there, should they consider having a trust in place, and what type?
Most people don't think about it when you're young, but if you're a young family, meaning you've got minor children, you might not have a ton of assets yet, but you want to make sure that what you do have is protected for your children. You could probably use a revocable trust. I don't think you need an irrevocable trust, but a revocable trust. You put your assets in. Again, they're going to avoid probate. Again, it may or may not be a big estate tax issue at the moment, but whatever you have, your children can't own, right? They are minors. So you don't necessarily want to leave your assets to a guardian and have the guardian deal with everything when you can design a trust to hold the assets and ensure how and when and where and why they get these assets. Just pick the right trustee, put the language you need in the trust to control it for those children, and the trust will accomplish that task. So just because you're young, folks, doesn't mean you shouldn't think about your estate planning. Sometimes it's not all about the money and the probate and the taxes, but more so about the family behind the estate plan.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they have written a brand new guide called Demystifying the Top 7 Estate Planning Trusts. Call right now for your free copy, 866-848-5699. That's 848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
Chuck, Paul, and Tucker with you today, and obviously the big focus for us is going to be Jerome Powell out in Jackson Hole talking about his view on the U.S. economy. At a little bit after 10 a.m. this morning, the text of his speech that he is going to give was published, and we've gotten some of the details that have come out. Again, the Fed puts this up on their website promptly at 10 a.m., even though he has not yet actually spoken the words. But the big thing, and the thing everyone's focused on, is one key sentence here, which is, it's about 4 paragraphs in. I'll quote here. Overall, while the labor market appears to be in balance, it is a curious kind of balance that results from a market slowing in both the supply and demand for workers. Okay, acknowledging both sides there. The unusual situation suggests that downside risks to employment are rising, and if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment. The market interpreting this saying, hey, all systems go for the Fed to begin a cutting cycle, and so what you have is you've got stocks rallying strongly on that news. The S&P 500 up about 75 points, about 1.25% on that news there. You've got bonds rallying on that news as well. The 10-year Treasury down 5.5 basis points to 4.277%. And so basically it looks to be that unless we get surprised by some inflation numbers to the upside in the next few weeks, or unless we have, some kind of conclusive shift to the upside in the jobs numbers, it looks like the Fed is set to begin a cutting cycle in September, which, as we laid out tomorrow, is a completely defensible position for the Fed, one that still has some questions, but the labor market has enough questions in it as well that you can defend them starting to begin a cutting cycle in a few weeks here.
As someone who on yesterday's show made a prediction with you that Nvidia's earnings would move the market more than the Federal Reserve speech, a little frustrated by the market action here. But the two words that I really took away, you mentioned some of the coverage is, conditions may warrant an interest rate cut. That is other verbiage that was used by Jerome Powell in this speech. And you take a look at the market action that we're seeing, S&P 500 rallying the news. I did not think that he would be perhaps this telegraphed. Not to say he said there was going to be a rate cut, but there certainly was a lot of ammo here that was pushing towards that direction. I had looked at the CME futures, which do a probability assessment for rate cuts heading into next month's meeting in the middle of September. That percentage, that probably had come down quite a bit over the course of the last week or so, from upwards of 85% down to 70% as early as this morning. That probability now sits at 75%. So a 5% jump just within the matter of the last half hour or so.
That hasn't even updated, by the way.
That's is it more?
That's running on a delay. So
okay.
There's a 15-minute delay there, so we won't even see that.
That says at 8:55. Okay.
Yes.
Yeah. So it very likely is going to be even higher than that, and that was just a 5% move there, and perhaps more than that when that delay gets updated. So certainly markets are rallying on the news, and something that you might be able to take your victory lap, my man.
Not yet. Again, we have yet to see much trading today, so we'll see how this ends up playing out here. The funniest possible outcome would be that we end up closing flat on the day.
Yes.
And look, that's a possibility. I mean, I could see this market rallying and the S&P ends up, 125 points today. I could see it ending up flat just because, people think about this a little more and say, okay, like, what does this actually mean? I want to read a few more quotes here just that kind of give the full picture. Powell's full speech, it also gets into their monetary policy framework, and we can get to some of that, as we go. But ultimately, the thing that people really care about here and now is, hey, what's the potential impact on the U.S. economy? So, another quote here. It's also possible, however, that upward pressure on prices from tariffs could spur a more lasting inflation dynamic, and that is a risk to be assessed and managed. One possibility is that workers who see their real incomes decline because of higher prices demand to get higher wages from employers, setting off adverse wage price dynamics. Given that the labor market is not particularly tight and faces increasing downside risks, that outcome does not seem likely. So, right here, Powell talking about, again, something, I think he listened to our show earlier this week because he
wasn't busy enough already.
No, I mean, look, he's basically saying the stuff that we said, but pretty much one of the things we outlined is, look, is there a possibility that you see a wage price spiral because of lower supply in the labor market? Maybe, but he's basically saying, look, I think the labor market's weak enough that employees and workers don't have enough bargaining power to get the higher wages that would cause a wage price spiral. It's an open question, but Powell laying down his mark saying, no, I don't think that's going to be a problem. And finally, this is where I think it all comes together, is in kind of one of his last paragraphs in this section, putting the pieces together. What are the implications for monetary policy? He tells us right here. It's like, okay, here it is. In the near term, risks to inflation are tilted to the upside, and risks to employment to the downside. A challenging situation. Again, as we outlined yesterday. Thanks for listening to the show, Jay. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. Our policy rate is now 100 points closer to neutral than it was a year ago, and the stability of the employment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, and again, it's kind of, hey, when someone says but, everything before the but, doesn't really matter. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Pretty much saying, look, I think we're going to need to cut rates. Now, he hedges a little bit with that may warrant instead of does warrant, but it seems like this has a dovish tilt to it at the moment because the Fed, in trying to balance these, is saying, hey, we're more concerned about unemployment going up and staying up than inflation going up and staying up. Whether that proves to be right, I don't know. It's going to, be a year or so before we know if that's the right decision. Again, this is not something where, like, you see this, tomorrow, hey, this worked or hey, this didn't. But Powell is clearly laying down a marker saying, yeah, this is what I think is going to happen here. And I think that we're going to need to start cutting rates as a result of it.
It's interesting. I believe when they released the Fed minutes, the larger concern was inflation that they mentioned there, and now sort of shifting gears and focusing on the labor market. Do I have that accurate? It's
kind of a head fake. It is, because a couple days ago, it was a more hawkish interpretation that was rolled out in the Fed minutes. This more dovish there. So it was kind of a head fake that we got a couple days ago. I don't know that necessarily means anything. And I do come back to another thing that we talked about earlier this week, which is, look, when push comes to shove, Powell has tended to operate in a more dovish fashion when faced with different questions out there. And this is right in line with it. I think it's fully defensible. I don't think it's anything where you look at it and say, hey, the Fed is, off their rocker on this based on the information that's out there now. And certainly, look, if we get to December and there's no rise in unemployment and inflation's continuing to move up, the Fed's going to have to answer some questions then, but let's get to December and see if that's actually a problem before we say, oh, gee, they blew it on this. I think the Fed's been pretty darn good for the last couple of years, and I think they've earned the right to make this decision based on the data that they're seeing and what's out there in the aggregate right now.
It is worth noting that I mentioned that the Fed meeting minutes were released. That was from about 3 weeks ago, and you mentioned the head fake there. The same thing could happen in the other direction. We have two really important economic reports that will come out before the September 17th meeting. We're going to get the jobs report for the month of August on September 5th, and then we're going to get the inflation report on September 11th. So those two will have a tremendous amount of influence on the final decision, but like we said, all indications at the moment and based on where the market reacting that perhaps they would cut, but there's always that chance for a change in course depending on what we see from those two economic reports. So I think that's important to mention too.
Let's take a quick break here. When we come back, let's dig in a little bit more on what Powell's speech said and talk a little bit more about previewing that September meeting.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy, or visit LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. If you have an IRA, it's critical to understand the tax rules that may affect your family as you plan for retirement. Current law requires most non-spouse beneficiaries to withdraw the full balance of an inherited IRA within 10 years, which may lead to higher taxes and reduced value over time. If beneficiary designations are outdated or incorrect, they could possibly override your will and change how your assets are distributed. That's why we're offering a new guide called Leaving a Lasting Legacy, a resource to help you better understand inherited IRAs, and other legacy planning topics that could affect your future. Make an informed choice and take control of your plan. Call 800-393-4001 and ask for your free guide today. That's 800-393-4001 or request your copy online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Breaking business news as it happens, only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange brought to you in part by the U.S. Virgin Islands Department of Tourism. 3 stunning islands, St. Croix, St. Thomas, and St. John, all just a quick flight away. No passport required, just sunshine, soft sand, and that warm island vibe. Craving a break? Well, plan your fall escape now and experience the beauty of America's Caribbean, the U.S. Virgin Islands. Book today at visitusvi.com. That's visitusvi.com.
Paul, what else we have from Powell's speech that you want to touch on? I know we've got a September meeting that we'll get to as well, but anything from the Powell speech that caught your eye?
Yeah, certainly he also addressed something that we had previewed earlier this week on the program about the importance of Fed independence, and I quote, FOMC members are going to make these decisions, interest rate decisions and other decisions, based solely on their assessment of the data and its implications for the economic outlook and the balance of risk. We will never deviate from that approach, something that many pundits thought would be mentioned as part of his speech. He didn't specifically address the White House, but certainly sort of made that resounding claim that the importance of the Fed's independence is critical for the Federal Reserve. And this is his last speech, like we've talked about, so making sure that he did address that particular subject.
So this brings us to the obvious topic of, okay, you've got this September meeting, and what are we going to see there? CME now pricing in a 91.3% chance that we see a rate cut at the September meeting. This up from 75% yesterday. And so it seems to be basically full steam ahead for, hey, when we get to that September meeting, which is going to be September 17th, so you go look at the calendar and you say, okay, it's about 4 weeks from now, a little bit less than that, but about 4 weeks from now. And really the questions are going to be, okay, what data do we get in the interim that can matter there? Because quite honestly, like durable goods orders next Tuesday, sure, I like to see it just to see what's going on, but ultimately not material to the Fed's decision-making process for September. The ones that are going to matter. PCE price index comes out next Friday, August 29th. That obviously is going to be a big one. The following Friday, September 5th, we have the August jobs report that is going to be coming out. That is going to be a big one. As we go deeper into September, we get out to September 10th and 11th, where we've got producer price index and consumer price index for the month of August taken together. You can usually get a pretty good sense of what PCE is going to be for August. So I think in looking at this, those are the releases that I have highlighted. Obviously, you could also highlight weekly jobless claims, but there's no one report that matters. It's going to be, hey, is there a change in trend that happens over the next 3 to 4 weeks? But PCE, jobs, CPI, PPI, and you could throw jobless claims in as well. Those are the key things to watch over the next 3.5 weeks because they're the only ones that have the chance of changing where Fed policy goes at that September meeting. Is that a fair assessment, Paul?
Fair assessment, I agree.
So, how could they end up changing things? Let's talk first kind of things stay the same. If we get a jobs report where, I don't know, call it 50 to 100,000 jobs created, unemployment stays at 4.2, and the inflation data all, comes in, 0.3% month over month still, like nothing crazy. The Fed is probably cutting in that case just because that's what we saw this month, and they, Powell basically committed them to, we're going to have to start cutting if that's still the case. If we see job growth pick up, let's say that we go to 150,000 jobs added. Again, the Fed doesn't really look at jobs added. They look at the unemployment rate. But let's say the unemployment rate drops to 4.1 and core CPI goes up to 0.4. Okay, that throws a little bit of a spanner in the works.
Right.
That's a little bit of a risk there that, okay, maybe the Fed doesn't cut in that case. If the unemployment rate moves down and inflation, the pace of it increases, that's the kind of thing where the Fed says, no, we're not doing this. On the other side of the ledger, hey, let's say the jobs picture worsens. Unemployment moves up to 4.3 or 4.4, and core CPI comes in 0.2. You might have a 50 basis point cut on the table there.
Right.
That's the possibility as well. So I think the base case now is clearly, hey, Fed wants to start some kind of cutting cycle, but as we get more data, even in the next 3 weeks, it's going to inform as to, hey, are they really going to kick it off in September, or do they need to turbocharge it in September? That's kind of the open question now.
Yeah, basically to summarize those three scenarios that you laid out, the only way presumably you would see them not cut rates, and again, we're just a couple guys in our chairs just chatting away, is this idea that
I'm standing up actually
in your chairs.
You're standing up? You're always sitting down when you do the show.
No, I'm just not tall.
Oh, okay. Got it.
I'm sitting, actually.
I knew you were.
I'm in my chair.
Just want to give me a hard time.
Thanks for noting that.
Is that we're going to have, for all the listeners out there, Chuck is sitting. If you have a tremendous jobs report, really, that's kind of the one that I come back to. If they just blow it out of the water and unemployment decreases, probably is the only way that you'd see potentially this cut be off the table from what we know today.
And when we talk about unemployment decreasing, remember there are two different ways that you can have that happen. The first is through a significant amount of jobs added. The second is through the labor force shrinking. One of those obviously has, better implications than the other. I mean, look, in theory, again, here's our hypothetical world where we've got 100 people living in a country and 4 of them are unemployed. If one of those people moves out of the country or leaves the labor force or however it happens, and now you only have 3 out of 99 that are unemployed, the unemployment rate did go down. Did the economy materially improve? No. On the other hand, if we have 100 people in the country and 4 are unemployed and one of them gets a job and we go from 96 to 97 people employed, hey, that's a material improvement in the economy. But these both represent a shift from basically 4% to 3% unemployment, but with different implications. And this is another thing that Powell got at here, which is, look, if the labor supply, if labor force growth is slowing as a combination of baby boomer retirements and reduced or even shrinking immigration, negative immigration potentially happens, then you have a case where, yes, the unemployment rate might not move, but it still might be bad for the U.S. economy because you don't have as much labor to do the stuff that you want, and you don't have as much spending power in order to buy the things that people normally buy because you have fewer people working. And as such, Powell, I think, is viewing that as a downside risk to the economy, even if unemployment stays flat, and that's kind of interesting. Let's take a quick break. When we return, it's Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month titled Leaving a Lasting Legacy. Mike, when it comes to naming beneficiaries on different accounts, what's the thought process that people should be starting with?
Well, first and foremost would be probably you want to do it. I know that seems so basic, but Chuck, I mean, how frequently do we run into this where forget about your investment accounts. Usually those are getting looked at. Your 401k, it's one of the first things you get asked. But I run into people every day that don't realize they can have beneficiary designations on bank accounts, for instance, and what an easy way to avoid frustration after you're gone.
Can you talk a little bit about how much time and effort that can save someone after a loved one passes away when it comes to being able to inherit assets quickly?
Anyone that's been through probate will know the answer to this, but these things can last a year, and it doesn't matter if it's a $5 million estate. Obviously, that's pretty complicated, but a $10,000 checking account could also need to go through probate, and it could take an equal amount of time depending on the complexities involved. And so there are a lot of benefits that are out there when it comes to just utilizing the tools that are made available to you, and beneficiaries is a big one.
Folks, the guide is titled Leaving a Lasting Legacy, and the way to request it is by calling 800-393-4001. Again, the guide is titled Leaving a Lasting Legacy. It discusses beneficiary designations and a whole lot more. And the way to request it again is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are reacting favorably to Fed Chairman Jerome Powell's speech from Jackson Hole about half an hour ago, where Powell left the door open for a rate cut next month, citing the rising risks for the labor market. Right now, the Dow, everything is actually rallying right now at the moment. Dow is up 1.7% or 772 points higher. S&P 500 is up nearly 1.5% or 93 points higher. Tech-heavy NASDAQ up 1.7% or 367 points. Russell 2000 up 3%. 10-year Treasury yield down 5 basis points at 4.277%. And crude oil mostly flat today. Let's see here. According to a report from The Information, Nvidia told suppliers to halt some production of its H20 chips after Chinese authorities push companies to avoid the product. Furthermore, Nvidia is also reportedly having conversations with the U.S. government about shipping a more advanced chip to China. Nvidia shares are up nearly 1% with their earnings on tap for next week. Meanwhile, tax preparation software company Intuit said it expects sales growth between 14 and 15% in its current quarter, below growth forecasts expected by Wall Street analysts. Intuit stock tumbling 6% on that news. Elsewhere, shares in Roth stores up 1% after the discount department store chain reported a rebound in sales in July. Roth also said tariff-related costs hadn't pinched profits as much as it expected. Workday falling 4% after the human resources software company said revenue climbed 13%, just above street expectations. And Zoom Communications raised its full-year outlook following a strong second quarter, sending shares in the video conferencing platform up by 9%. I'm Tucker Silva, and that is Wall Street Watch.
Paul, anything else that you want to add that's Fed-related? I know we spent the first couple segments today discussing Powell's Jackson Hole speech and the ramifications here. Anything else you want to add on that?
The last thing, and this was pretty much this was well known probably going into this, is that he did a sort of mea culpa on their previous policy stance where they were going to let inflation run past their 2% target. Reversing course on that, just saying that having that framework in place from what we saw in 2021 makes no sense from a framework perspective.
Let's talk about this piece from the Wall Street Journal then. The biggest retailers are thriving in the tariff economy, and basically what it's talking about is that companies like Walmart and Amazon and TJX, because of their scale and relationships with suppliers and things like that, they are trying to offer deals to consumers in ways that smaller companies might not be able to because they don't have the financial or logistical resources to be able to pull it off. And so there's a lot of data now pointing to these companies scooping up market share from smaller retailers. And not great news for smaller retailers, but for these guys, a way to continue consolidating market share under their umbrellas.
I do worry about that, Chuck. Obviously, the intention behind some of these tariffs in place is this idea of bringing back manufacturing to the United States, and certainly more of a focus on bolstering the U.S. businesses. But what's probably lost is that the size and scale of Walmart and Amazon and TJ Maxx and these types of retailers, they have that flexibility that you're talking about from a supplier side that a local midsize or small business doesn't have. And I just worry that the unintended consequence of some of these tariffs is just accreting more value to these big behemoths that have the ability to withstand increase in their prices versus the local mom and pop shop that's a clothing retailer, for example, or others out there. So it's certainly something to follow. And for the stock market perspective, yeah, it's nice that Walmart and Amazon and TJ Maxx are doing well. But for just that middle America, mid-market, it's something that we need to follow as hopefully not an unintended consequence of all this.
I want to move now to talk about what I think is a big story, and there have been a few of these in the last week or so, and I'm starting to get a little bit edgy again when it comes to AI here. So this one from Bloomberg was originally reported by The Information, who I looked into trying to get the report directly from The Information, and apparently you need to pay like $700 a year to subscribe, so I said, no, I'm not going to do that. Instead, I'll just read the Bloomberg report of the report from The Information. Nvidia Corporation has instructed component suppliers, including Samsung Electronics and Amkor Technology, to stop production related to the H20 AI chip, The Information reported, citing unidentified sources. Now, the H20 chip is the one that Nvidia specifically builds for China. It was also the one that back in the spring, the Trump administration said, no, you can't send that to China, actually. We're not going to allow it. And then reversed course several months later in July. When they did, I mentioned, and Tucker can pull, we don't use tape anymore, whatever it is that we use, the ones and zeros, the hard drive, however it works. You can pull the tape, and I said at the time, wouldn't the really interesting thing be if China said, hey, thanks for allowing those shipments, but we don't want them anymore? And lo and behold, that's actually what China is doing now. And so it's clear to me that Nvidia is underwater on these chips that they're producing because the Chinese government has pretty much told domestic companies, hey, don't buy any of these H20 chips if you can avoid it. And so NVIDIA is now trying to spool down production on those. And this in conjunction with, again, just a bad quarter for semiconductor earnings in general. I mean, you go down the list, and whether it's Applied Materials, you can go through like the whole semiconductor index. Applied Materials, whether it is ASML, Broadcom, AMD, Micron, Texas Instruments. Like, you go down the list, and it was generally every other day it was, semiconductor company X is down 10%. And yeah, the ChatGPT 5 release maybe a week or a week and a half ago now that's been panned fairly universally by lots of different people and lots of different groups. And I wonder if we're reaching an inflection point on this, but the counter to that is, hey, there have been times where we've thought that before, and it hasn't mattered at all. But this is kind of a clustering of data points where I look at it and go, oh, this is kind of interesting. I wonder, what this looks like 3 to 4 months from now.
We'll get NVIDIA's earnings report next Thursday. It is worth noting that they did take a $5.5 billion write-down when it was initially announced that these H20s were not going to be able to be shipped back in the spring. The stock probably did rally a bit. I can't remember the performance offhand when the announcement came out that they would resume shipping those H20s. So ultimately, it'll be interesting to see if NVIDIA has any commentary in terms of what they anticipate. There was initially some hope that they would claw back some of that $5.5 billion that they had written down from the sale of these H20 chips. It also now seems like they're trying to pivot to utilizing a different chip to replace this H20 to be sold to China. But it is incredible. Of any nation out there, that is one in particular with China that can stop on a dime and really make a significant influence to shutting off orders in quick fashion.
Yeah, I mean, look, when you're an authoritarian regime, you can basically do whatever you want as long as you have, the capability there. The question to me is, what does China want in order to buy these chips? Because it's clear that they obviously want to be able to import them, otherwise they wouldn't have been to this point. The question that's out there is, what does China want from the United States in order to reauthorize, the buying by Chinese companies of these chips? And I don't know the answer to that, but it's not one that fills me with a great deal of, happiness in my heart. It's probably not something that the U.S. would want to give up. And so I sit there and I say, I hope that, the Trump administration is not trying to, just benefit Nvidia to, push the stock price higher. And I hope that there's, something that they're willing to say, hey, no, we're not going to do this just so that Nvidia can sell these chips into China. We're going to have to see what it looks like.
And then the government take a 15% cut of those chips. That's where
they do. Yeah. They do. Let's take a quick break here. And when we return, how long can the stock market prosper? Who knows? Let's not do that. Do we want to talk about Roth IRAs? Yeah, I think Roth IRAs could be a fun thing to talk about. So let's do that when we return on the Financial Exchange.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com. A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy or visit LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. When it comes to legacy planning, having a will is important, but it may not be enough. A will only covers probate assets, and the probate process can be slow, public, and expensive. That's where trusts come in. Trusts can help you avoid probate, keep your wishes private, and control how and when your assets are distributed. Whether you're looking to support family, minimize taxes, or prepare for the unexpected, a well-designed plan can make a meaningful difference. Our new free guide, Leaving a Lasting Legacy, covers wills, trusts, and other strategies to help you build a strong retirement plan. Take the first step towards clarity by calling 800-393-4001 right now and asking for your free guide today. That number again is 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Business and financial news affecting the markets and your wallet. We've got it all straight from Wall Street right here on the Financial Exchange Radio Network.
Paul, we got a piece here in Bloomberg today. It's titled, How to Maximize Your Roth IRA and Retire Rich. Well, does maximizing your Roth IRA mean that you're going to retire rich, Paul?
Not necessarily, but certainly it can provide some tax advantages in the future. Ultimately, the major benefit with a Roth IRA is it gets the same tax-deferred treatment that an IRA or 401k would, but when you withdraw those earnings and those proceeds later in life, after you're 59 and a half, they come out tax-free, which is a real fantastic benefit that they have. Basically, you pay the taxes up front to contribute to these Roth IRA vehicles, but after they grow for however many years you've been invested for, then you get to withdraw the gains tax-free. So they certainly have tremendous advantages if you're able to set them up appropriately, Chuck.
What kind of limitations are there in terms of who can contribute, how much you can contribute, things along those lines?
Yeah, so there is an income cap on contributions. So for those who are single filers, the income ceiling is $165,000. For a married couple, it's $246,000. So if you exceed those thresholds, you are unable to do Roth IRA contributions. However, many retirement plans out there for employers do offer a Roth 401k, which is not subject to those income limitations. And if you want to go really down into the weeds, you can also facilitate a backdoor Roth IRA contribution. That is when you do a non-deductible IRA contribution and then immediately take those funds and convert them over to a Roth. You do want to make sure that you're talking with a tax advisor when you go with those approaches, because you don't want to have an existing IRA in place before you're trying to do that Roth IRA backdoor there.
Yeah, things can get pretty complicated there, so it's always something where you want to chat with a licensed accountant before going in that direction. Quite honestly, before making any retirement account contributions, you probably want to speak with an accountant just to make sure you understand whether you're contributing to the right type of account, whether you should be upping your contributions, contributing to different types of accounts. There's a lot, that can go on there. But ultimately, I think when we talk about this in the context of financial planning, Paul, I'm a big believer in having, kind of a balance of different types of accounts, so that depending on your needs and the time when you need the money, you have the ability to tap different sources. Having funds that are across Roth IRA, traditional, and even after-tax brokerage gives you some flexibility to pull from different account types depending on your tax situation in any given year.
It's great to have that three-stooled approach like you're talking about, tax-deferred, just regular investment accounts, and the Roth bucket to pull from. For any listeners out there, one of my bigger regrets from just my early career is not knowing about Roths earlier for those grandkids that you have out there, for your kids, particularly when you get that first job out of college. You're not making a lot of money oftentimes, and the utilization of a Roth 401k where you're paying the taxes up front when you're not earning a lot and then allowing for that tax-free growth over time is something that I look back on that I wish I knew more before when I was younger starting my career.
Folks, if you've got questions about Roth IRAs or other types of retirement accounts, Armstrong Advisory Group is available to assist with those questions. Phone number to call is 800-393-4001. We've got offices all through the New England region to sit down and explore what types of retirement accounts can make sense for you and your specific financial situation. Because, again, everyone's different. There's no one-size-fits-all approach to this. That number, again, to schedule a consultation is 800-393-4001. Again, that is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Paul, when's the last time you've been to a Chili's?
Oh, I'd say probably 6 or 7 years ago was the last time.
I got to say, it's been longer than I can't even think of the last time that I went to a Chili's. And it's not because I have, any hard feelings about, Chili's or anything like that. It's just not something that, kind of has clicked for me in recent years. And so it was surprising to me earlier this year when I saw that Chili's was seeing, same-store sales growth of north of 30% in Q1 and just, monster numbers. I mean, even, when you look at their parent company, Brinker International, their net income for the full fiscal year more than doubled from the prior year. And we've talked at length about how restaurants in general are having a tough time right now, and Brinker is largely cranking because of Chili's. And so what Chili's is going to be doing here, they are going to be paying out bonuses at 200% of their corporate workers' target rates because the profits are so good and they want to pay out bonuses to those corporate workers. I'm sure, maybe when it comes to store managers and things like that, you might see some things as well there. But Chili's just absolutely cranking right now. And I got to be honest, that's not something that I thought I would be saying in 2025.
I can't reiterate how rare that is, Chuck, on when we cover these types of companies in the fast casual sort of space, like Darden Restaurants or other. To have this type of sales growth that they've seen is just out of this world. It's something that I never could have envisioned, that something as established as Chili's could have its highest sales and most profit for a fiscal year since 1984. I do hope that it does trickle down to the store managers and the waitress and waiter staff at some of these Chili's here. I hope these bonuses aren't just tethered to the corporate workers, because ultimately a lot of this is done kind of in the trenches at the ground floor level too. So hopefully they get some pass through, because these numbers are just so out of this world. You got to take care of the people who are really doing the work on the front line for you there too.
Yeah, absolutely. Also, found a little bit of interesting data from the Bureau of Labor Statistics. Nothing that is earth-shattering or that's going to impact the economy in any way, shape, or form. But they conduct on an annual basis their current employment statistics survey. Actually, it might be every 6 months. I don't know, to be honest. But one of the questions that they ask people is, hey, how frequently do you receive a paycheck? And I thought this was just kind of interesting just to see the distribution of when people get paid. Paul, what do you think is the most common pay period?
Got to go with the every 2 weeks. It seems like that's the most common.
Biweekly is correct. 43% of workers get paid on a biweekly basis. What do you think is the next most common?
Weekly.
Correct again. 27% of workers, Paul. You're up to 70% now. What is the next most common way that people get paid?
Monthly.
No, incorrect, Paul. I'm
Twice a
sorry. Yes, semi-monthly, Tucker. Thank you for scooping that one up at 19.8%. And finally, monthly is 10.3% of workers. I realize this adds to 100.1%, but that's obviously because of some rounding that they do here. But I found this interesting just to finally see, hey, how often do people get paid? The monthly number I thought was actually higher than I thought. I mean, quite honestly, I can't imagine going a full month between paychechs.
Yeah.
That just seems kind of like a lot. No, thank you. I need something along the way just to make sure I feel okay. But, about 10% of workers get paid on a monthly basis. We're going to take a quick break now, but a whole lot more coming up on the Financial Exchange.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much, and they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. If you have an IRA, it's critical to understand the tax rules that may affect your family as you plan for retirement. Current law requires most non-spouse beneficiaries to withdraw the full balance of an inherited IRA within 10 years, which may lead to higher taxes and reduced value over time. If beneficiary designations are outdated or incorrect, they could possibly override your will and change how your assets are distributed. That's why we're offering a new guide called Leaving a Lasting Legacy, a resource to help you better understand inherited IRAs and other legacy planning topics that could affect your future. Make an informed choice and take control of your plan. Call 800-393-4001 and ask for your free guide today. That's 800-393-4001 or request your copy online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about your new guide, Todd, Demystifying the Top 7 Estate Planning Trusts. Now, do you lose control if you transfer your assets to an irrevocable trust in order to protect them from long-term care expenses?
Well, that's great when you mention that irrevocable trust, but limit it to the kind of trust where you're protecting it from the cost of long-term care. Because as the guide says, there's 7 different kinds of trusts that we're trying to demystify. And there's also many kinds of irrevocable trusts out there, not just one type. So many people think there's just one type. But this particular type, where you're trying to protect it from the cost of long-term care expenses, the answer is no. You do not lose control over your assets. There's a whole spectrum of control with irrevocable trusts. And this one, you keep about 95% control. Like, you can live in your house, you can sell your house, you can buy another house, you can invest your money, you can manage your money, you can collect the income. Even the tax liability of these trusts are designed to be at your own rate. In other words, they are grantor trusts. You don't even pay any higher income taxes when you have this irrevocable trust. So this kind of trust, folks, you keep control and you protect your assets from the cost of long-term care.
Call right now for your free copy of Cushing & Dolan's comprehensive guide titled Demystifying the Top 7 Estate Planning Trusts. It will help you determine what type of trust is right for you and your family. Call 866-848-5699. That's 866-848-5699. Or you can request it from LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Paul Lane. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Paul Lane.
This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment.
Chuck, Paul, and Tucker with you today, and at 10 a.m. this morning, Jay Powell kicked off his Jackson Hole speech, and big thing, big takeaways, the quote there and a couple more that really suggest that the Fed is pretty convinced to begin a rate-cutting series in September. And so the questions obviously still are out there about the data in the interim. But otherwise, markets basically pricing in all systems go for rate cuts on the fixed income side of things. And on equities, stocks basically responding, hey, rate cuts mean that the economy will be able to continue to grow, and as such, equities responding with a monster move upward today. The Dow Jones Industrial Average up 852 points, 1.9%. The S&P 500 up 103 points, about 1.6%. The NASDAQ Composite up 433 points, 2.05%. And even the Russell 2000, which has basically just been a dumpster fire for, quite a while, just trailing the other major U.S. indices, that is up 3.75% today, as small caps obviously assumed to be beneficiaries of a rate-cutting cycle here. When we look at fixed income markets, 10-year Treasury down 8 basis points, not quite as much as you would think given the magnitude of the move in equities, suggesting that, the fixed income markets are buying this, but maybe a bunch of people on the equity side were just positioned, a little bit more bearishly heading into today. That could explain some of the sell-off that we saw over the previous 4 to 5 days, was people just cleaning up positioning heading into this Jackson Hole symposium. Also, oil. We've got West Texas Intermediate up 18 cents a barrel today. And then gold is up $37.90, up 1.12% to $34.19. This on the back of a big downward move in the dollar, which is off 0.96% right now. So that's a huge single-day move. And so the dollar getting hit pretty hard on this with the Fed, again, kind of moving forward with the idea that they'll be cutting rates. They haven't guaranteed anything. They haven't put it in writing. We're definitely going to cut rates. Jay Powell wouldn't do that. But suggesting pretty strongly, I think we're going to start a rate-cutting cycle in September. Anything else to add, Paul, on that item?
No, I think you hit all the major points there, Chuck.
Make sure that you stick with us, because in a little bit we're going to be joined by Ernie Tedeschi, who is the Director of Economics at the Budget Lab at Yale University. He's also a former chief economist for the Council of Economic Advisors. He's going to be talking to us about tariffs in just a little bit. But we are going to kick things off this hour with a piece from Bloomberg. It's titled, "Boomers Are the Next Big Consumer Culture Frontier." And I got to be honest, don't agree, Paul.
Oh, okay. Why not?
Well, first, not to, get all, no, actually, look, let's put all the generations against each other, because that's just kind of what happens, right? Here's the thing. The boomers had their day as the center of consumer attention. Do you know when it was, Paul?
No.
You don't?
No.
I'll tell you, it was the late 90s and early 2000s. Do you know how and why I know this?
Based on average age of most consumption, or the biggest target demographic for businesses out there?
No, it was based on the products that were being sold, the cultural trends that were out there, and the music that was being played on advertisements. And what I mean by this is, if you look at, kind of the big, products that made their way mainstream in the late 90s and early 2000s, look no forward than the automotive industry, where two of the most popular entrants during that time that subsequently faded out were, remember the Volkswagen New Beetle?
Sure.
Boomers reliving their glory days of the late 60s, early 70s. The Ford Thunderbird, remember they came out with the retro-styled version of that as well?
Sure.
Big seller during that time. Clear targeting of boomer nostalgia. Other things that you saw during that time. You remember bell-bottoms came back?
I do not remember that.
You don't remember late 90s bell-bottoms made a comeback?
I barely remember the cars, but I just went along.
They made a comeback. Again, another cultural thing. Other things that you saw. Do you guys remember when Paul McCartney played the Super Bowl?
That sure. I do remember.
Paul McCartney was not relevant to 18-year-old Chuck, but sure was relevant to 50-year-old Chuck's parents. Okay. You saw multiple instances of this in different areas where culturally that was the demo that was being sold to then. And I also have been I've picked this up also just in terms of what we're seeing now, where as a proud millennial, remember millennials are no longer 20 years old. They're generally anywhere from 32 to 47 at this point. As a proud millennial, I see my generation being marketed to because we're now the biggest generation out there with an increasing share of the wealth pie. And you see this again in terms of, hey, what are you seeing in as far as, product development and things like that? We talked yesterday, Paul, about, hey, granted, I know that it's from a tech perspective, but hey, that kid's landline phone. How many of us remember talking to our friends on the landline phone as kids? Of course you're going to try to sell that because you want your kids to have the same experience that you did. You see it in terms of music and advertisements. Do you ever wonder why, like, the Backstreet Boys are showing up in Super Bowl commercials now? It's not because 15-year-olds think the Backstreet Boys are cool. It's because 40-year-olds remember, oh, yeah, the Backstreet Boys. I remember them. Everybody.
Well, they're also on tour, too, right?
Okay, but are 15-year-olds obsessed with them?
No, but it's a good way.
I agree with you.
It's a good way that they're doing it. You're going after someone with a big wallet share.
Correct.
To do the nostalgia tours. Those are really popular. And then the Super Bowl with out in L.A., you had all the Snoop
rappers.
Dogg, Dr.
Exactly.
Dre, all the 90s, 2000s popular musicians.
You know who you don't see playing the Super Bowl right now? Mick Jagger. And it's not because he's dead. He's still alive. It's just because that's not who is making the big buying decisions at this point. So, yes, I do agree with this piece here that, okay, I understand that boomers do have an awful lot of wealth and they've got, a bunch of money to spend. But the fact is they're not making buying decisions for families now at this point, and that's going to prevent them from being the target of most advertising and being the next big consumer culture frontier because, again, not to be... Actually, no, I will be ageist here because it's ageist against myself. Once you get above 30, you're not cool anymore.
In the eyes of advertisers. Certainly.
Correct.
Yeah.
Advertisers want to sell...
18 to 35 demo.
Not even to 18 to... Quite honest, advertisers want to sell to, 15 to 24. That's the sweet spot because for that high school demo, their parents are going to buy the stuff for them. For that college and early adult, hey, it's your first chance at freedom. Here's the stuff that you can buy and make your choices on. That's the demo they want to sell into because once you're making those choices at those ages, they're locking you into those choices for the next 50 years. See the Backstreet Boys on tour now. If you sell to a 15-year-old, they will still like the stuff when they are 40.
It is worth noting, though, just from a numbers perspective, the demographic shift in the country that this Bloomberg piece outlines, where back in 2020, Americans who were over the age of 65, there was about 54.5 million, and there was 74 million Americans under the age of 18. You look at that figure in 2024, the Americans over 65 jumped from 54 million to 61 million, and the Americans under the age of 18 went from 74 million to 73 million, and you now have 11 states out there where older adults outnumber children. So there definitely is the shift there in terms of just the numbers of people that we're talking about in those demographics.
Yes. I make the case, though, that numbers aren't what matter. It's
dollars.
Ultimately dollars and spending choices. And quite honestly, coolness matters when it comes to advertising. I know that we don't want to believe that. I know we want to believe that it's no, I buy things based on the product, not on... Of course we buy things based on the coolness. How do you think Apple made its entire business? It's because they sold cool. It's what they did. Let's take a quick break here. When we return, we are going to be joined by Ernie Tedeschi, the Director of Economics at the Budget Lab at Yale University. He joins us right after this.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. When it comes to legacy planning, having a will is important, but it may not be enough. A will only covers probate assets, and the probate process can be slow, public, and expensive. That's where trusts come in. Trusts can help you avoid probate, keep your wishes private, and control how and when your assets are distributed. Whether you're looking to support family, minimize taxes, or prepare for the unexpected, a well-designed plan can make a meaningful difference. Our new free guide, Leaving a Lasting Legacy, covers wills, trusts, and other strategies to help you build a strong retirement plan. Take the first step towards clarity by calling 800-393-4001 right now and asking for your free guide today. That number again is 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy, or visit LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up, because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
As promised, we are now joined by Ernie Tedeschi. He is the Director of Economics at the Budget Lab at Yale University, also a former chief economist for the Council of Economic Advisors. Ernie, thank you so much for joining us today.
Thanks so much for having me.
Absolutely. Ernie, when we kind of try to price out the cost of tariffs to the average American family, I know you and your group have done a bunch of work on this year. As it stands with current tariff rates, what are we looking at as far as the potential additional cost to families on an annual basis?
Yeah, so if you look at all the tariffs that have been announced in 2025 to date, beginning with the initial announcement in February on Canada, Mexico, and China, and then everything that's been done since then, the total would, on average, come to $2,400 per family per year. Now, a couple things. It will take, about 2 or 3 years for tariffs to fully phase in and pinch families by that full amount. Right now, families and businesses are timing a lot of their purchases, so we're not seeing the full effect of tariffs yet. But eventually, we think it'll get to that full $2,400. The other thing is that when you open up the hood and you look beneath that number, it's not going to be the same for every family, which I think makes sense to most people. Actually, for lower income people, they are going to get hit harder as a share of their income than higher income people will. And that's because lower income families spend a greater share of their income in general, and they spend a larger share of their budget on imports in particular. So whereas a top income family might get hit by roughly 1% of their income as a result of 2025 tariffs to date, a lower income family is going to get hit 3 times that. So there's really a lot of, difference among American families.
Is there any sense, I know that you mentioned it might take 2 to 3 years for the full phase-in to take effect here. Any sense as to kind of how far along we are in that process, just from a dollar perspective or percentage perspective right now? I know that, in the recent CPI data, we've started to see a few categories that are showing some price increases there. But are we really seeing it showing up on store shelves yet or not yet?
Yeah, so if it's showing up in CPI, then that's a sign that it's showing up in store shelves somewhere on average, right? And so, look, CPI is a national average, so that's not necessarily the lived experience of everyone at any given time. But you're absolutely right. In particular, when you look at durable goods, so things like household appliances, electronics, furniture, those prices, believe it or not, as measured by CPI, usually fall a little bit year to year. That behavior has completely gone the opposite direction so far this year, and those prices are up so far. So it's good circumstantial evidence that something new is weighing on durable goods prices this year, and it's almost certainly tariffs. Based on what we've seen, we think that consumers as of June or July are paying roughly, half to 3/4 of the tariffs so far. We think that eventually that'll stabilize at around 80% of the tariffs. That is, that American businesses will eat maybe 1/4 to 1/5 of the tariffs, and American consumers will shoulder the rest. They'll pay 75 to 80% of them, with foreign producers paying virtually none of them. So that process has probably so to go back to your original question, we're actually fairly far along in that process now, but we have a little bit further to go before families are paying what we expect to be the full amount that they're paying.
Ernie, do you think there are convincing cases for the tariff-related price increases generating either a one-time increase in inflation or becoming a perpetual problem? Is there a reasonable case that both of those could be considered?
I think both of them are reasonable. And look, what I tell people all the time is the last time that we had tariff increases of this magnitude was the Smoot-Hawley tariff in 1930.
None of us were alive.
Yeah, exactly. None of us were alive, and our economic data back then was not nearly as good as it is now. So a lot of this is terra incognita for us. We are all, we all just need to sort of, have wide uncertainty bands and pay attention to the data and be humble about what we think we know or what we don't know. All of that. So the case that tariffs are a one-time price increase is what you're going to find in virtually any economics textbook, right? A tariff is a tax. You put that tax on, and as long as you don't change it, that should manifest itself as a one-time price increase. And that's the rationale, for example, in the Federal Reserve among officials who think that they should ignore the price effects on tariff, right? Because their mandate is inflation, the growth or the change in prices. And their argument is, all right, once we get through this, there's not going to be any more change on the other side. But there is convincing research elsewhere that it's not just the one-time price level shift from tariffs. Tariffs weigh on supply chains, things that will persistently affect not just the level of prices, but inflation over time. And I think that is what Chair Powell and some other Fed officials are worried about. They haven't decided whether that's happening yet or not, but they're keeping a keen eye out for whether they see evidence of that happening.
Ernie, a couple minutes left here. I have a non-tariff question for you, specifically focusing on labor supply, because we're seeing signs now that labor supply is stagnating, maybe even shrinking, depending on how you look at it. So 2 questions, and I know this is a lot to get through here. Are there signs that this may create conditions for higher wages that could lead to inflation spiraling? But also, if you have lower labor supply, could it also lead to lower demand for products that then prevents inflation from spiraling?
You're right. No, great question. So the slowdown, or possibly even the decline in labor supply, is in great part being driven by changes in immigration, because immigration was a big driver of the increase in labor supply that we had seen over the last several years. And you really put your thumb on it. Immigration increases both demand and supply. So when people say, "Oh, well, if we reduce immigration, then wages will go up," right? Because there's less labor supply. What you're forgetting is that when an immigrant comes here, right, they bring both their labor supply, but also their consumer demand at the same time. And so if they leave, or if you're talking about slowing immigration down, right, putting aside the merits of those policies, just from an economic perspective, it's actually ambiguous, right, what happens with wages or with growth over time because of those two things happening at the same time. Research in the past has basically said, yeah, you know, when you have a surge in immigration, when, you know, economic papers have studied specific regions that have had surges in immigration,
Ernie,
there's a little bit of...
I apologize. We've got to get out. We got a hard break here, but I do appreciate you joining us.
Yep.
I appreciate all the information. Thanks so much for the time today.
Thanks so much. Have a great day.
Ernie Tedeschi from the Budget Lab at Yale.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network. A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy, or visit LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide available this month titled Leaving a Lasting Legacy. Mike, one of the things that people have to navigate now is figuring out which accounts to leave to different beneficiaries. As an example, if someone has two children, one in a high tax bracket, one in a low tax bracket, how does that potentially impact who receives which assets?
Well, let's call it out. First and foremost, most commonly, people just divide equally. And there's nothing wrong with that. I get the fairness argument with all of this. But taking your example here, let's imagine we have one person with an average effective tax rate of 10% and another one with 25%. Obviously, there's going to be a massive difference in terms of what is left over with a traditional IRA, for example, for that person in the 25% bracket versus the 10. And so with the new rules over the last few years when it comes to requiring those accounts to be emptied over the course of 10 years in most cases, especially on the retirement account front, there's a lot of different stuff that can be looked at there. That doesn't even take into account things like non-retirement accounts, Chuck, right?
Sure.
So for those, you have a different set of rules that applies to those, generally pretty preferential tax treatment. And so you can be really intentional about how you leave the biggest legacy possible to your heirs as a whole.
Folks, the guide is titled Leaving a Lasting Legacy. The way to request it is by calling 800-393-4001. Again, the guide is called Leaving a Lasting Legacy, and the way to request it is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are roaring following Fed Chairman Jerome Powell's speech from Jackson Hole earlier this morning, where Powell left the door open for a rate cut next month, citing the rising risks for the labor market. Right now, the Dow is up over 2%, or 933 points higher. S&P 500 is up nearly 1.7%. NASDAQ up over 2%, or 436 points higher. Russell 2000 up nearly 4%. 10-year Treasury yield is down 8 basis points at 4.246%. And crude oil is mostly flat today, edging higher. According to a report from The Information, Nvidia told suppliers to halt some production of its H20 chips after Chinese authorities pushed companies to avoid the product. Furthermore, Nvidia is also reportedly having conversations with the U.S. government about shipping a more advanced chip to China. Nvidia shares are up nearly 2% with their earnings on deck next week. Meanwhile, tax preparation software company Intuit said it expects sales growth between 14 and 15% in its current quarter, below street forecasts. Intuit stock is tumbling over 4%. Elsewhere, Roth store is up 1% after the discount department store chain reported a rebound in sales in July. Roth also said tariff-related costs hadn't pinched profits as much as expected, and Zoom Communications raised its full-year outlook, sending that stock up by 10%. I'm Tucker Silva, and that is Wall Street Watch, and we haven't done trivia yet, so let's do that. Continue our World War II trivia theme. Question today: which was the first Axis power to surrender? Once again, which was the first Axis power to surrender? Be the second person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the second correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Paul, we got a piece here from the Financial Times. It's titled "The U.S. Tourism Slump That Never Happened." And I'll make the case it wasn't one that never happened, but one that just has been more moderate than I think people thought it could be. And basically what we saw is that when we look at air travel and hotel bookings, year over year for the full year, they are both still down, but showing some signs of stability and even improvement in a few places. And most of the decline appears to have been driven by a decline in international travelers coming to the U.S. rather than domestic travelers altering their plans in any dramatic fashion. The other thing that I will say, and this is even from data from Marriott that we covered a few weeks back, most of the strength that we are seeing is in high-end luxury segments. As you go down market, the trends tend to worsen, and that meshes with what we're hearing just about the overall state of the U.S. economy as well.
Yeah, we had quoted that statistic from the Marriott data of revenue per available room. On the luxury side, that's up 3% this year through the end of July versus the economy and mid-size accommodations. Think like a Fairfield Inn or something like that. They had seen a 1.5% decline there. On the foreign traveler front, like you mentioned, we've seen about a 4% drop through the first 7 months of 2025, according to the U.S. National Travel and Tourism Office. A lot of those are people not coming across the border from Canada, but other parts of the globe as well. It really has been just ringing my head, Chuck, that almost the stock market feels like it is very critical for this leisure and hospitality side of things. We've talked about that statistic before, the top percent of income earners accounting for half the spending. And when you look at the tourism data here, it seems like because the market has fared so well this year and you have wealthier consumers making up a bigger share of the profitability of these hotel companies, that is becoming a very critical ingredient to tourism spend. Again, that's just kind of an anecdotal take from me, but it just does seem like that luxury traveler is really critical for the leisure and hospitality space.
Well, the holidays are just around the corner, so now's the time to plan your winter escape. Trade in the cold for sunshine, sea breezes, and island vibes in the U.S. Virgin Islands, America's Caribbean paradise. Whether it's a romantic retreat, a family celebration, or a solo recharge before the new year, St. Croix, St. Thomas, and St. John offer the ultimate warm weather getaway. Lounge on sun-drenched beaches, explore vibrant culture, and celebrate the holidays island style. No passport, no hassle, just warm weather, clear blue water, and unforgettable memories. This is where the stress melts away, and you find yourself naturally in rhythm with the heartbeat of the islands. Go to visitusvi.com and book your trip today. That's visitusvi.com. The U.S. Virgin Islands, America's Caribbean paradise. Your holiday escape starts here at visitusvi.com.
Paul, let's talk about, I don't want to talk about AI. Is there anything left to talk about with AI at this point? Like, some people think it's going to work, some people don't. What are we really going to talk about whether, there's a Wall Street firm that's arguing, hey, we came up with a really complex model that we think will outperform really simple ones. Is there anything other to say on that other than, who knows, we'll have to see how it's going to play out?
That's totally appropriate for that one. I mean, everyone and their brother is trying to come up with some model, and outside of Renaissance Technologies, which goes back decades, there really hasn't been a case of that over history.
Okay, here's what else we have for AI. Google is trying everything to sell AI to skeptics. Great, hope it works for you. Meta poaches Apple AI executive even as it plans hiring Slowdown. So I guess you didn't really slow down that much.
Apple has an AI executive?
One. He's not human.
They're just taking everybody. They're taking everybody and their brother. We should just retitle ourselves as AI experts and hope to get a bag from Meta.
Will Tesla robo-taxis kill auto insurers? Hardly. Okay, again, I have no clue. Probably not is the answer, but I don't know. Like, maybe we get to a point where self-driving is actually, a thing that is broadly available. To this point, it's in a few niche areas, and we'll see how it goes. But it does seem to be making more progress. I don't know why it has to be exclusive to Tesla.
Why does Tesla have to get this headline? This is Waymo's ballpark.
Waymo's, they're the dudes who actually are operating this thing in more places, and yet, Tesla gets it just because they have a few operating in like
Austin,
1.5 cities
11
now.
taxis or something like that. Yeah, that just doesn't seem fair to Waymo. That business is so much more under the radar than all of the publicity that the robo-taxis get for Tesla.
Anything else that we want to add when it comes to AI, or did we just speed run the whole thing?
We did that pretty fast and efficient for a Friday. I don't think that we've missed anything.
Okay, I'm glad that we did that. Let's take a quick break then, and when we return, we're going to be joined by Paul LaMonica from Barron's on the back end here.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. When it comes to legacy planning, having a will is important, but it may not be enough. A will only covers probate assets, and the probate process can be slow, public, and expensive. That's where trusts come in. Trusts can help you avoid probate, keep your wishes private, and control how and when your assets are distributed. Whether you're looking to support family, minimize taxes, or prepare for the unexpected, a well-designed plan can make a meaningful difference. Our new free guide, Leaving a Lasting Legacy, covers wills, trusts, and other strategies to help you build a strong retirement plan. Take the first step towards clarity by calling 800-393-4001 right now and asking for your free guide today. That number again is 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A trust isn't just a document. It's a powerful tool that can help protect your assets from the nursing home and even reduce or eliminate estate taxes. Cushing & Dolan are leaders in elder law, estate planning, and asset protection. This month, they're offering a free guide called Demystifying the Top 7 Estate Planning Trusts. This guide breaks down the most common types of trusts, explains the pros and cons of each, and helps you understand which might be right for you and your family. Trusts come with different rules, benefits, and tax treatment, and choosing the wrong one could cost you. Learning the differences now can help you make smarter decisions for your future and your loved ones. Trusts are a critical part of any well-designed estate plan, but they can be complex. Don't guess your way through it. Get the facts first. Call Cushing & Dolan now at 866-848-5699 to request your free copy, or visit LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical medical conditions as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange is now available every day from 11 to noon on SiriusXM's Business Radio Channel 132. Stay informed about the latest from Wall Street, fiscal policy, and breaking business news every day. The Financial Exchange is live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
Now's a great time to register for the DAV 5K taking place Saturday, November 8th at Fort Independence on Castle Island. The race has sold out each of the past 4 years, and slots are continuing to fill up. So don't delay. Visit dav5k.boston and reserve your spot, or join our team here at the Financial Exchange by registering under Team TFE. That's Saturday, November 8th. For this year's DAV 5K, sign up now at dav5k.boston.
As promised, we are joined by Paul LaMonica from Barron's, here to talk to us about a little-known company, but an entrepreneurial titan that who probably should be a little bit more well-known than he is. Paul, thanks so much for joining us today. Really appreciate it.
Yeah, thanks a lot for having me come on and talk about QXO.
I'm excited to talk about this, Paul, because Brad Jacobs, who is the CEO of QXO, had wrote a book, How to Make a Few $1 Billion, which I have read, which is fantastic. Maybe give our listeners a little bit of a summary of who is Brad Jacobs, because he really should be talked about sort of similarly to Warren Buffett in terms of the success he's had over his entrepreneurial career.
Yeah, this is another mega billionaire. I think at last check worth just under $17 billion. And he has a history of kind of using a roll-up strategy to buy companies in fragmented businesses and turn them into, powerhouses. So this is something that he did with United Rentals, a big company, also logistics firm XPO. He did this with a company called United Waste Systems, which became eventually a part of Waste Management. So now he's trying to do this with QXO in the building products industry, which is incredibly fragmented. There are a fair number of public companies, but also some private mom and pop firms as well. And QXO is starting the process. Earlier this year, it bought Beacon Roofing Supply and is hoping to use that as the springboard to do more deals in the building and construction related businesses.
You've mentioned, his strategy is all about M&A and trying to take efficiencies through the use of technology to kind of build his businesses. But it seems like the trade secret's out a little bit in a sense that he has this tremendous track record. And from where the stock is trading right now, how would you view it in terms of its pricing? Because it does seem like he has a lot of fanfare behind him and a lot of analysts and investors that are jumping on his historical track record.
Yeah, definitely. I mean, many of the Wall Street firms that cover QXO are incredibly bullish, but it may not be too late to get in. There's another analyst that just launched coverage today at Benchmark, putting a $50 price target and a buy rating on QXO, in part because of the Brad Jacobs playbook. He thinks that there will be more deals ahead and that the company will use Beacon as a means to grow. So that's one thing. But what I was really struck by is that there is this one money manager, Orbis Investment Management, that is the largest shareholder. They have almost a 15% stake in QXO. And they wrote in a post last year that they were buying QXO before they did even any deals. So this was before Beacon. It was a bet on the notion that eventually Jacobs would find a series of companies to acquire, and that's turned out to be a pretty good bet. And when you look at what they were saying in their report, it also still suggests more upside ahead because they were saying, the company should probably trade in a range maybe of 2 to 5 times book value. It's currently at about 1.6. So if you take the median there, 3.5 times book value, that still gives you upside of, $46 a share, more than double where it's trading at now, although it's having a great day today along with the rest of the market. It's up about 6.5% today.
That's Paul LaMonica from Barron's talking to us about QXO and their sort of little-known named CEO, but who should be probably a bigger name out there. Paul, thanks so much for the time. Really appreciate it. Have a great weekend.
Thanks. You too. Appreciate it, guys.
All right, in the previous segment, we asked you the trivia question related to World War II, which was, who was the first Axis power to surrender? That would be Italy. Gil from Sandwich is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Gil. We play trivia every day here in the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Paul, do you want to talk about the FTC suing gyms to make it easier to cancel, or battery-flavored chips?
I want the gyms because I had this circled myself, Chuck. Let's talk about it.
So, first thing, I think it was either last year or the year before, the FTC put out what they called was their click-to-cancel rule, which basically said, look, if you can sign up for a product online or in any medium, you have to be able to use that same medium to cancel the subscription. Basically saying you can't make it harder for someone to cancel signing up for something than it was for them originally to sign up for it. That rule was then it was supposed to go into effect in July of this year. There was a court, I forget who, that struck it down earlier this year, and so it has not gone into effect. So now the FTC coming out, and they filed a lawsuit against a few gym operators, pretty much saying, look, you've made it really hard to cancel because, I'll just quote here like how ridiculous it is. For starters, members are required to log into their website and print off a cancellation form. Then you had to, but the thing is, you had to sign up at using the LA Fitness app or a QR code, so you might not actually have your login information for the website because you can't just get the form through the app. And then, if you don't know how to log in, you have to go and provide the original email address that you used, get what's called a key tag number that gets handed out when you signed up, the first 5 digits of the bank account or credit card listed, and then you can finally figure out how to cancel. Oh, by bringing the form in to a physical location where you have to go through a whole bunch of other things.
The reason I wanted to cover this story is because we had a similar experience in my household with this type of thing where my wife was a member at Gold's Gym and the pandemic hit and obviously a lot of people canceled their gym memberships. I was able to get out with a phone call, but since then, in that remaining weeks, the gym changed its policy where my wife would have to print out a form, hand physical signature, bring it in to the gym in order to cancel.
I do that same thing, Paul.
All right, it was a handwritten letter.
I had to as well.
Actually, yeah. So this process is not unique. It seems like a bunch of gyms were doing this. Granted, we're years removed from the pandemic, which even in that instance, not that I agreed with it, you could understand why gyms were kind of hanging on by a thread. So they were trying anything they could to delay membership cancellation. But in 2025 here, it should not be this difficult. So that's the reason why I wanted to cover this, because if it's easy to sign up, it should be easy to cancel too, and they've got to change this.
I mean, look, I know that like this could, a lot of things could be reduced to this, but I also believe that a lot of things should be reduced to this. We put a man on the freaking moon. We can figure out how to cancel gym memberships with one click of a button at this point. The only reason that we don't is because the companies know that a certain percentage of people just won't come in and they can keep getting the revenue from them.
Yeah, Planet Fitness's business model.
Like, honestly sucks. Like, it's just kind of, it's just parasitic more than anything else. And so, look, if you really want to make this, like, foolproof, fine, Congress, get together and pass this stuff. Like, how big is the gym lobby? Like, is there that money being thrown at Congress by Planet Fitness and LA Fitness in order to, prevent that from happening? Probably not. Like, get together and just actually legislate the thing then, because Otherwise, it's like you're playing whack-a-mole on all this stuff. And, hey, I'm a big believer. Look, you know what would increase Congress's popularity an awful lot? Write legislation on this and figure out some kind of legislation that bans spam phone calls. And spam texts.
Getting 4 of those a day.
Because you can do it if you actually decide to work at it. And it's just there's no incentive for anyone to do it right now. So, it's no different from, hey, you want to be a good mayor of a city? Fill the potholes, keep, the police, fire, and schools funded, and people will love you. Hey, you want to be, good in terms of, Congress? Make things less annoying that businesses are doing that we can't stop them from doing ourselves.
Hear, hear.
But that's just me. Taking a look at markets as we wrap up. Dow's up 2%, S&P's up 1.5%, NASDAQ up 2%, Russell 2000 up 4%. A lot of green on the board heading into the weekend. Not bad. We'll take it. It's a good start at least. We're done for the day, done for the week. Have a wonderful weekend, and we'll see you on Monday.